All right. It's a great day in South Florida. My name is Chris Igo. Welcome to Living in South Florida. If you're new to the channel, welcome aboard. And if you're a returning viewer, well, then thank you for continuing to participate in my journey. Now, we're going to get into it right now because the Fed meeting has concluded. They increased the Fed funds rate by 0.75, 75 basis points. And the markets have reacted and will continue to react to their hawkish policy. And we've got brand new local housing market data that will absolutely bust the myth that the Florida housing market is crashing anytime soon. Now, full disclosure, I know I've done lots of content talking about housing market dynamics, and I know I've shared a lot of content about what a future housing crash, correction, decrease, and predictions around what the future will look like as the pain of the recession continues to escalate. And please understand, everything that I said is true. And I stand behind everything I've ever shared, because it's impossible for me to ignore what will likely happen in the future based on everything I've experienced in the past. But for today, for right now, it's important to understand what the market conditions are. So without any further ado, let's get into it right now. And let's go direct to the source. Let's go to our good friend, Jerome Powell, and let's see what he has to say about the housing market. And please stick around to the end, because I will very likely debunk many of the things that he's saying as it relates to the Florida housing market, specifically as it relates to South Palm Beach County. And I'm absolutely going to pop the bullshit balloon that many content creators are out there creating very interesting, very entertaining, very watchable content, but I can no longer stand the exploiting of fear and uncertainty and the application of data which is misapplied, especially in the Florida housing market, and share the truth so that you can go out there and make the best decisions for yourself, for your family, and for your financial bottom line.
Have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset, and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country, where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and.
Let me just jump in here real quick and give my real-time reaction. Jerome Powell just said that homes were selling to the first buyer at 10% over ask. That is absolutely not the way it was. So I need to debunk that right now. When we were in the frenzy, when interest rates were much lower, when there was very little supply, meaning there weren't many homes for sale, homes were not selling to the first buyer by any stretch of the imagination. What actually happened was there was a tremendous amount of buyers, meaning demand, for those homes. So homes weren't sold to the first buyer. In my market, in my experience, and on my listings, there were hundreds of buyers that were lined up and willing to do whatever it took to purchase that home. So unless you had the world's worst realtor who had absolutely no common sense and did not do their job, the home was not sold to the first buyer, who came in at 10% over ask. What really happened was multiple offers, competing offers, that bid the price higher. And when I was representing the seller, I can promise you it was way over 10%. But in that market, what it looked like was multiple competing offers that were willing to pay whatever it took in order to purchase the home, and were willing to waive contingencies to remove any risk for the seller. So they waived appraisals, they shortened loan approval timelines. In some cases, people who were using loans lied about it. And if there was a loan contingency, many of those buyers worked with realtors who were savvy enough to position the contracts to appear to be cash contracts, in spite of the fact they were using financing. So they waived the loan contingencies completely. And they waived appraisals and reduced inspection periods and paid whatever price was necessary in order to purchase their dream home and dream lifestyle. And while I can't speak to what the dynamics were in other markets, and it's possible market conditions were different in other places, that's exactly what happened right here in my market. And it was very challenging for buyers, but it was phenomenal for sellers. And those dynamics have shifted. But we're going to do a deep dive on how much they've shifted and what's actually happening right now, so I can do some myth busting today about perception versus reality. And I will let my main man Jerome finish his statement here, but I do want to be very clear that what he just said is not accurate. But how would he know? He's the Fed chairperson. He's not out there advocating for buyers or sellers on a daily basis, boots on the ground. He's not a real estate professional. And I'm not an economist. I don't pretend to be. But I do have common sense. I can see what is happening moving forward. Having been a stockbroker for 20 years and having weathered the storm of every financial crisis that's happened over the last 47 years, I'm pretty good at being able to debunk myths and perceptions and also accurately predict, based on leading indicators, what is very likely to happen in the future. And I'm committed to sharing the truth as I see it, taking real data and applying it the right way to alleviate some of the fear and uncertainty that exists for many people locally and anywhere I can. And I hope you appreciate it. And if you do, please subscribe to the channel, give it a thumbs up, share it with a friend, and just know that I love you for it. Now let's let Jerome finish his thought.
Demand housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And, that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market. As you know, it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
So here's what I heard, and I hope it makes sense to you. Jerome Powell just went out there and said exactly what I've been sharing in almost every content piece I've done over the last year, which is that supply and demand will dictate price. And while he references the term correction, he also mentioned the term deceleration of price. And deceleration of price in my market is exactly what we're seeing. And to be very clear, deceleration of price does not mean crash, does not mean fire sale, does not mean half off homes, does not mean going down. It means slower, moderated price appreciation. And we haven't seen anything like that since 2019. Now, so that we do not get it twisted, talking about expecting the market to look like 2019 for a long time. But I can't bury my head in the sand and not pay attention to leading indicators that are happening right now. I've covered all of that in great detail in previous videos. But please make no mistake, the recession pain, the inflation pain, the economic changes that are in play right now, coupled with the global changes that are happening right now, they will absolutely change the dynamics of every market, everywhere, over time. And nobody knows what that looks like. Jerome Powell doesn't know what that looks like. But here's what the Florida housing market looks like today. Now, one of the cool things about YouTube is it gives me a lot of information about the analytics of people who watch my channel. And I know there are many of you out there that are watching other channels and getting information and making decisions based on what you've heard. And there's a tremendous amount of fear mongering that's going on right now. And I've got to rebut some of that with the truth, because although there is some truth in some of this content, and it's really entertaining, it's fear mongering, it's clickbait, it's bullshit. And if you're using that information to govern your decision-making process right now in today's market, then you will lose. I want you to win. And I certainly don't want to put you in a position to absorb risk in the future, which is why I'm committed to sharing the best information and the best data applied correctly so you can go out there and make the best decisions for yourself, for your family, and for your financial bottom line. And here's what the most current numbers are as it relates to South Palm Beach County's housing market. And yes, I realize we're in September and these numbers are lagging, they're from August. But they are important to understand the changing market dynamics. And the market dynamics are changing. But here's what they are. Closed sales are down 24%. And average sales price is up 16%. 16%! That's not a crash, that's not a fire sale, but it's not 20%, it's 16. And so here's the million-dollar question that everybody asks me. What do I think home prices will be in the future? It would be totally irresponsible for me to go out there and make price predictions of what I think market values will be in other markets, because every market's different and there are many different dynamics and many different type of buyers who are buying homes in those markets. Regionally here, I believe we are more insulated by many different factors, so I suspect we'll return to a more moderated pace of growth, which is probably something closer to 2 to 4% appreciation. But I could be wrong. It could trade flat. It could go down. And separate to that, especially with all of these new subprime loan programs that I'm hearing about, and who knows what the government's going to do in order to stimulate the housing market, which I know they're not going to say they're going to do, but Florida's already created different types of programs that make it much easier for people to afford homes that probably couldn't any other way. But I don't know what the impact of those programs or what those loans in the future might be. But it's altogether possible, in spite of the recession, in spite of inflation, they may pull a rabbit out of their hat, keep the musical chairs of the economy game still playing. And they may do things to stimulate the housing market. So although I said I think we're going to see 2 to 4%, it could be 20 to 40%. I don't know. Well, I don't think it will be 40%, but it might be 10. And last year it was north of 20, so I don't know that it won't be 20%. But I suspect we will see an increase in prices that are moderated back to 2 to 4%, which is more like normal appreciation. So what else do these numbers tell us? And the numbers don't lie. Well, it took a little bit longer for homes to go under contract. 55% longer, which translates into 14 days. Whoop-de-freaking-do. It took 2 weeks to go under contract. That's what a balanced market looks like. So the good old days of the recent past, where your home was sold in hours, that's not happening anymore. Now let's look at pending sales, which were down 19%. And more importantly, let's look at new listings. Well, in South Palm Beach County, that was up 6.5%, which means there are more homes on the market for sale, which is great if you're thinking about buying because you've got more choices. And month supply went up 68%. Or scratch that, we'll round up. It's 68.8%, so really it's 69%. And I won't make the obvious joke here, but we're at 2.7 months. 2.7 months is a seller's market, but it's no longer 2 weeks of supply. It's no longer 2 days of supply. It's almost 3 months supply, which is a far cry from a buyer's market. Although it's a hell of a lot closer, which means if you're thinking about buying, you've got more leverage to negotiate because you've got more choices. So if you're thinking about buying, you've got more leverage, you've got more options. You can go out there and score your dream home and dream lifestyle with much better terms than you could in the past, with the exception of interest rates, which have increased dramatically over a short period of time. And that's a whole different conversation. But I've done tons of content about that in the past, so please check out my next video, which will play at the end of this one. And if you've got questions about whether it's financially right for you, then please reach out to me. And I promise I'm not going to lean in with sales pressure because I don't want you to buy a home if it doesn't make sense for you financially. But I can promise between myself, my team, and our lender, we will do a financial deep dive so that you can determine whether it's right for you. Notice that most of you are not local in my market. Please understand that we can serve and support you at the highest level, no matter where you are. And if you're thinking about moving ever, and want to be connected with a real estate professional that we know, like, and trust, who can serve and support you at the highest level, irrespective of market conditions, then please click the link below, or you can find the links in the comment section and opt in for a referral, and we'll get you set up right away. All right, so I've already shared South Palm Beach County. Let's look at Boynton Beach. This is where I live and the community that I serve. Please keep in mind when I talk about Boynton Beach, there are many markets within markets that exist within Boynton Beach. Just like there are markets within markets everywhere. So although I'm giving you the big picture about Boynton Beach, please understand these dynamics shift radically depending on which market you're looking in Boynton Beach, or really anywhere. But the numbers speak for themselves, and I'll let them tell their own story. Closed sales were down 7%. Average sales price increased by 18%, which is not a crash, which is not a half price home, which is not a fire sale. It's 18 freaking percent. And it took a little bit longer for those homes to go under contract. It took 21 days, which is a return to normal. Because in normal markets, in balanced markets, it takes time for a home to sell. Now, to be clear, those are not my numbers. I sell homes much faster because I know what I'm doing, but most agents don't. Nonetheless, it took 21 days, not the end of the world. You can also see that pending sales dropped 11%. But here's where it gets a little bit more interesting. New listings were up almost 10%, and the inventory of homes for sale exploded by 53%, which statistically is a big jump. But what does that really mean to you if you're thinking about buying or thinking about selling? Similar to what I said before, if you're thinking about buying, you've got more choices. You've got more leverage. If you're thinking about selling, you've got more competition. And the month supply of homes for sale upticked 90%. And although that seems like a big scary number, here's what that really translates to. 2 months of inventory, which is a seller's market. But it's not 2 weeks and it's not 2 hours. And you're not going to have the insane dynamics which we had when interest rates were 2%. We are returning to normal. And I suspect that looks a heck of a lot more like 2019, which is a far cry from 2007 and 2008. Now, make no mistake, there are major changes happening in the economy, but the Fed finally seems to be telling the truth and is very hawkish in their policy. And I believe they will continue to be. But irrespective of whatever policy decisions they make, real estate will always trade. And it's always a good market for someone. But inflation is real. Recession is real. And the leading indicators that I've covered in other videos are all very real. So we must know what's going on and track those leading indicators best of our ability so we can understand what the future will look like. And I do expect that 18 to 24 months from now, when the pain of recession is actually felt, and that pain becomes so unbearable that the consumer must sell. But I could be wrong, and maybe none of those things will happen. And I also know that certain markets are more protected and more insulated than other places, because some of the homeowners in those markets are far more affluent than others. But make no mistake, everyone's going to feel the pain, but that does not mean that everyone will have to take the same action. And so while I do suspect there will be forced and distressed sales in the future, but I'd be lying through my teeth if I told you that I know for certain what it will look like or how that will shake out in my market. But I'm committed to telling you the truth and sharing in real time exactly what those market changes are and provide you the best information so that you can go out there and make the best decisions for yourself, for your family, and for your financial bottom line, so that everybody can max out South Florida living to the fullest if it's right for them. Now, if you're outside of my market and want to learn about every city within my market, then please opt in for our city/relocation guide, which will tell you everything that you want to know about every city in South Florida. If you found this content valuable, please subscribe, give it a thumbs up, share it with a friend, and please check out my next video because I suspect you'll love it a lot. If you're even thinking about moving to or living in South Florida, you've got to give me a call, text, email, send a carrier pigeon, a smoke signal, by any means necessary, because we've got your back when it comes to moving to or living in South Florida. And until next time,